Welcome back. This is the Alchemist Nation podcast. My name is Walter Morello, and I get the pleasure of traveling all across the country, speaking to other real estate investors and professionals who are looking to give back and contribute. Today, I've got on the show Andrew. I'm going to mispronounce this. Andrew, how do you pronounce your last name?
Schutsky, like two words, shut and ski, no problem.
Welcome to the show, Andrew.
Thanks, man. Thanks for having me. It's a pleasure to be here.
So, Andrew, you're actually from New England. We were talking about it a little while back, a little while before the podcast.
Yep.
How did you end up getting into multifamily in Pennsylvania?
Oh, man. So I'll take you back a few years, and I'm probably dating a lot of listeners, but it started for me back with a house hack when nobody really called it a house hack in 2007. Bought a single family, was traveling, was on the road about 50 weeks a year. And I'm like, this is crazy and wasting 80% of the space in my house. Let me just try to put some cash in my pocket. Well, I wound up renting out the majority of that house and covering most of the expenses. And that's where it kind of started from there. I'm like, wow, this is really powerful. I mean, from a young age, I was interested. I was that kid that was obsessed with Monopoly. I've got a Monopoly pinball machine in the basement. Like, I was all about just property and, who owns it? Where did it come from? What's their story? And that was in my head the whole time. And, I've been working, still work at W-2 for the last 20 years and will continue to do so. But starting with that house hack in 2007, a series of single family rentals, got into short-term, and we still do this, short-term rentals down the Jersey Shore here. And as I look to scale that, you can relate, everybody else can relate, the down payment, all the work you put into a single family, the rehab you goes with it, the tenants in and out continuously, it's a lot of work. And you look at trying to scale to 1, 2, 3, 4, 5, 10 properties. And we're looking at, making offers on these short properties and short-term rentals. And it's a lot of cash outlay. I'm like, wow, there's got to be a better way. So I started looking, actually Bigger Pockets, like many others, turned me on to a lot of possibilities, found that forum, and I went full tilt. I read this is like probably midway through 2020, wasn't that long ago. I connected with an old broker friend of mine down from Dallas, Fort Worth, I worked with in consulting. And he had been in the space for probably 8 or 9 years. I'm like, hey, Doug, like, what's the secret here? Like, what is this too good to be true? And he's like, there's a reason I'm in this business. The reason I left a very high paying job to get in here. So I started picking his brain. I probably went through 25, 30 books in a 2-3 month period, hired a mentor, joined a mastermind. I figured, if I'm going to do this, I'm going to go all in. And this is on top of working 50 hours a week. My wife's traveling all the time, got 2 young kids, launched the podcast. So a lot going on, but it's been a really exciting journey and I can't wait to see where it takes me. So
the question I ask everybody, right, is when you started this, how many units did you think you were getting to? How many units are you right now? And what's the difference between where you think you're going to go?
Yeah. So, I honestly didn't know. My goal was never like when I started this, everybody would ask me like, hey, how many doors you want to be in 2021? And I was kind of like, there's going to be a fair amount of doors that come with this. But my mindset was always like, how many people can I help kind of discover what I've discovered? How many investors can I bring along with me in the next 10 years? And my number is 10,000. It's not number of doors. And of course, if you help 10,000 people invest, you're going to accumulate naturally a number of doors in doing that. But I started with a handful of the single families where I started looking at 10, 12 units and throwing out some offers. I'm like, man, this is going to be really expensive to do this all on my own. Looked at a couple of JVs and started as an LP investing in about almost 1,000 doors as an LP now, and under contract on 94 units as a GP now. So that's kind of my short story and what the last, less than a year really.
Nice.
Yeah.
Nice. And that's 9,400 units?
No, sorry. 94 unit as a
That's
GP.
better. Okay.
Correct.
So
yes.
I was going to say, damn, bro.
No, I wouldn't have time.
I wasn't prepared for that number.
Yeah, just 10,000, no big deal. Yeah. Right.
That's that may be the ultimate goal, right? Get to 10,000, just 10x.
Yeah. Like I said, I mean, it's going to be, I'm after, scale and volume, but I'm more thinking about like, I love what I've discovered. I'm really passionate about it. How can I help the same people learn the same thing? And, you and I are podcasters together, and it's all about kind of sharing what's out there, which is really great.
Yeah. We do it for the same reason, right? Like, so
Correct.
I have 100 millionaires as my goal, right? 100 millionaires, inspired to build 100 millionaires, because it's a 10,000 person goal, right? Like,
correct.
Maybe you got to go through 10,000 people to get the 1%.
Correct. Yeah, correct. And you think about it, sounds like a lot, and you maybe the first year is only 100 or 50 or whatever. Right. That's fine. You got to start somewhere, but you can't be thinking 100 people in 10 years. That doesn't really get you the scale you need to. So you got to think a little bigger.
That's it. You know, it's Grant Cardone's 10X rule. We
Correct.
actually,
Yep.
we just did the numbers. We ran about 100 people through the mentorship last year. So
Mhm.
it's like, okay, like that's a base. How do we get to where we want to go? Like, how do you get to where you want to go? How do you help more people?
Yep.
And, you know, you're finding probably in the syndication realm, there's a lot of people who just don't know how to invest. There's a lot of
Yep.
people who are sitting on money, right? You did 94 units. So there's investors who are liquid. They had cash sitting around,
Yep.
but they weren't able to invest it. And then
Yep.
they looked at the time, like they're probably high income earners. You know, most of my
Oh yeah.
investors are high income
Yep.
earners. And like if they were to take that time off and go and learn how to do the flip themselves, they'd actually probably lose money on the other
Yep.
side.
Yep.
And yeah, so what's your experience with that?
Yeah, what got me thinking about, hey, what's my role going to be? Like I've got a lot of experience in construction and all that stuff, but I was really thinking about, am I going to be the investor guy? Am I going to be the capital raiser? And I was thinking about, hey, I work with a lot of really cool people through my W-2. I'm really fortunate to have a decent position and earn a really good income and you rub elbows with some really successful people. So I'm like, wow, this is a great place to start. And, you start talking about like what you're doing and just kind of planting a seed. And then like, oh, that sounds really interesting. I'm sitting on these RSUs, these grants or stock options, and I'm really hesitant to put all of it in the stock market. Like I would never advocate put everything in one place, right? Like anybody else. But hey, I've got this problem to solve. I don't really know what you know, and you seem to be really passionate about it. So hey, help me out. Help me find the deals that you guys are doing. I don't have the time to look for it. Maybe I don't have the desire, even if if I have the time, I'd rather be playing with my kids or playing with my cars or going for a walk in the park, hiking, gym, whatever, name one of 100 hobbies. I'd rather do that. And I'll leave it to you guys, the experts, to take care of it. And that's why they do it. So
Yeah, so when you said stock market, my whole heart was just like, no, like
yeah,
get out of the
yeah,
stock market. If you're in a 401k, perfect, great.
yeah, yeah,
Go and get it self-directed,
yeah,
use a company like Equity Trust and get your money
yep,
in real estate. Get a hard asset right now.
yep,
The stock market's it's tanked, it's dropped and it's been in this crazy bubble. It's been going up, but right now where it's at, it's unsustainable. It's
yeah.
unsustainable and the government can't hold it up. And
Yeah.
it,
Yeah. And I'm a stock guy and I have been in the stock market for, pretty much since I've left college and
yep.
I'll always continue to invest in the market, but it's never going to be the same percentage as it was before. And yeah, I've like I said, W-2 for 20 years. So we've accumulated a decent nest egg in the 401s, but we've converted some of that to self-directed. Actually, we use Equity Trust as a matter. So free plug for them.
Yeah, they get a ton
I
of free
recommend
plugs
them
from
to my
all of us.
investors. Yeah, I recommend them to my investors. They've done webinars for us for the company, so that's been cool. But no, I'll still always do the stock thing. It's just if you're going to take the time to do individual picks and day trades, that time I'd rather spend looking for deals just personally. But index funds and stuff is good for diversification, right? But that's where it ends for me. That's my personal opinion.
No, I agree 100% because it's what I've done, personally. I was day trading back in '08 and continued dabbling and investing in stocks and it's made money and it's done well for me. I've done very well in the stock market, but the real estate market has done better. It's just done better for me and it has a longer term approach. And I'm sure it sounds like you've seen the same thing.
Absolutely. Absolutely.
So it's, to get yourself out of, and I'm not talking about investing in REITs. Like if you're in the stock market, REITs are great. And I love the REITs. I love the dividends, but what you get in a syndication or you get in investing in somebody's real estate company is a significant chunk of the pie. Like you're actually getting more because there's no other people like bringing down the returns on investment.
And what I like is it's a much more for those that are more like tangible people. Like I want to touch and feel. You can go visit a property, right? Like you buy a stock, and it's like almost like you're buying Bitcoin because you'll never probably see the inner workings of that company. Yeah, you have voting rights on certain issues and things like that, but it's not the same as like, hey, you're one of a small share of investors that are actually making a difference in a property and turning it around and and generating a living for people while doing it. So that's what I find it's really cool is the tangibility of everything. If that's even a word, but
how are you? Yeah, no, it's a word for today. How are you with we'll say appreciation, right? So where do you stand with appreciation, cash flow? How much do you look at it like?
Yeah, I'm a cash flow guy. For me, good times and bads, that's what gets you through the bad times. Appreciation's great. But if you don't have cash flow, you're not going to go very far with it. As good as your reserves can be, if you're not flowing So that's when we look at deals, that's number one for us. And for some who are, willing to wait 5-10 years and take a loss year to year if need be, that's not us. We're 100% cash flow people. And it's, for us, it's the typical 8-9% and up is our green flag to go further. So,
absolutely. Yeah, I like it. We're the same way. Cash flow is king.
Yep.
But we put ourselves into a position for appreciation. We'd like to be in markets that could appreciate, but we were going for cash flow. And so it's exactly what you were talking about before this podcast, before we started talking, was the deals are slim, man. Like where the fuck is the cash flow right now?
Well, I mean, it's funny. We keep saying this. I thought it was ironic. I named my podcast "Crushing Cash Flow" for a very good reason. Is that like that's top of mind, right?
Yeah.
But you're right. I mean, it's competitive out there. It doesn't mean any of us give up. I mean, we're relentless. We're looking every day. Even us, like me, working 50 hours a week on top. It's like 6 o'clock comes around. We're like hammering through my emails, shooting emails to brokers, networking with guys like you. Hey, what do you got on the table? How can I help? I mean, constant. You got to be relentless. I mean, that's the only way.
And it is, that's what, we have the same students, we're in different markets, but the same students. I guarantee you the people are asking the same question. And this is the question we get often is it's too hot? Is it too hot for us to invest? It seems like, the market's just too competitive. Should I wait?
Yeah.
But what is your advice to those people?
I mean, there's never the perfect time. I mean, everybody's heard that a million times. It's almost a cliche. There's never a perfect time. There's never the best time or the worst time. There's always an opportunity out there. It's just a matter of how you view it, right? Every crisis comes opportunity. You've heard that a million times.
Yep.
And I've lived it. It's not always going to be great out there, and it's not always going to be easy. In fact, most of the time it's not. But you just got to go for it. You got to get after it, and that's the only way.
Yeah, I love that you said it that way, right? Because we've bought property each year, right? For the past since since I was 22. No, not 22. First 4 years I didn't do anything after that first house, but since I've been 26, I bought a house every year for the last we'll say 10 years, and every time I think the market's about to die, right? Every time I've bought over the last decade, I've been like, well, the market's about to crash. Market's about to crash. And you're always buying on cash flow, and yet the market doesn't crash. And I've said this before on the same podcast, on other people's podcasts, is that I think we're at a new bottom. I don't think we're going to see below the prices we're at today. I think this is the new bottom base, and it has nothing to do with real estate. It has everything to do with the dollar.
Yep.
Right? Because real estate, fundamentally, nothing's changed. Right. Yep. It's not like we ran out of some, and it's not like we haven't been building, although we are about 9 million houses behind in inventory based on what we should be. So, price pinching a little bit, but it's a dollar going down. Right?
And in certain areas, as you know, you're a Florida guy too. Like I'm a Florida investor and hopefully soon to be a resident one day.
I'll see you down here.
Some areas are better than others. Some areas are higher than others, but like anything else, jobs, population, income growth, job diversity, they're the things to look for, and where, you stack the deck in your favor, as they like to say, right?
Exactly. Yep. And so where are you invested in Florida right now? Where are you at? What buildings do you have down there? What does it look like? Are they condos, singles?
So actually in Georgia, not in Florida yet, but
you're coming.
Correct.
So where at in Georgia?
So outside of Atlanta,
nice.
Greater Atlanta area. Yeah, correct. So I'm just looking at this. I started in Florida, looking around there, and it just so happened that we network with people who have deals in surrounding Southeast areas. So I'm really good anywhere where there's an up and coming emerging population, good submarkets. I'm not saying it has to be Florida. I just thought that, we travel down there a lot anyway. It's easier to manage. I know the markets. I know a lot of connections, property managers, et cetera, in those areas. It's been a little tighter in terms of, getting offers accepted down there. It doesn't mean I'm going to stop, but I just, like it. If you're going to invest somewhere and you're going to have to travel to properties, and you're going to have to, right, to do CapEx planning, to oversee construction, the deal.
Yep.
I'd rather be someplace I enjoy going. So that's kind of, why, for me, that's why Florida. It's why I'm looking there so aggressively now, like yourself. It's a great place to hang out,
It is. And if you were to pick a market in Florida and say, hey, you know what, this is where I could see myself crushing cash flow down here in Florida, where would you put yourself? Like, what city are you looking at?
Yeah, it's not just one. I mean, you got to be a little creative these days too. But for me, it's the Gulf Coast. I'd say from Tampa down to Naples is the general area we're looking at, and that goes extended out to Central Florida, so like Lakeland, Orlando, and then even looking at Jacksonville. Although we're building connections out there pretty rapidly, you got to get creative. You can't just be like, hey, I like Orlando or I like Tampa. I mean, there's only so much you're going to do. You can do that. It's just going to take you longer. So You just got to build connections, property managers, brokers, relationships in those different areas, and just get going. I mean,
Yeah, it's true. My buddy Mitch Jorsky is constantly pushing me on Jacksonville, and I'm like, bro, like Tampa, Orlando, like just let me build my thing here, and we can look at Jacksonville.
Yeah.
But I'm still buying property back in Massachusetts, even though I'm down here. Like I was just on the phone with some of my investors yesterday, and they're like, dude, like fuck Mass, I'm out.
Yeah.
And like I agree, I absolutely agree. But my network is so good there, I'm still getting great deals. So it's like
and it's funny you say that, because some of my investors ask the same thing. Like, why not Pennsylvania, Delaware, New Jersey, Maryland? Like, where the neighborhoods, you can drive there in an hour and a half. And I'm kind of like, again, I could invest there, and there are deals that come by.
For sure,
they're few and far between. They could come by, but I'm like, why not? Again, stack the deck in my favor. Where I know people were moving to. Population, jobs are going down there. Job flexibility is a big trend these days. So that's my thought process. And they're like, okay, that makes sense.
I'm sold on it. It. I moved here, right? You see the demographic shift, right? You see the migratory patterns. Like people are coming to Florida and they have money to pay rent. Like they're not looking to buy, they're just looking to rent, and they're just shifting in droves. And like all the signs say, like Florida's just, the prices are starting to get crazy. They're almost as crazy as they are in Massachusetts. In certain areas.
Yeah, we even looked at land, and even that, like, they're sitting longer, but like they're land that's been sitting for 2 years in the suburbs, like up by you, Odessa, that area.
Oh yeah.
They're increasing the price. It's sitting there for 2 years, and they're jacking, $50,000, $60,000, $70,000 up for an acre. I'm like, wait, this hasn't sold, and that's your tactics. So maybe it works. People are buying it, but so
sometimes you raise the price to sell the house, right?
I mean, it's important to be, as exciting as everything is, you got to be financially disciplined. So, I mean, preservation of capital for investors is number one. And even for me, for my family, for single family, like, you want to be smart about it. Like, maybe it's a bubble, maybe it's not, but I don't want to, nobody wants to overpay, but you got to be patient. Like, people get excited, they get emotionally invested, and you got to avoid doing that. So
yeah, Dorina keeps telling me she wants a house, and I'm like, shit, like I don't mind. Like I'll buy a single family. I haven't owned a single since I was, 26 years old. Well, I've owned a few flips, but I haven't lived in one. But I would do it, but this thing's got to be the best neighborhood, the worst house. Like I want the worst freaking house.
And it's tough to find those, because a lot of the wholesalers get a hold of them, and that's what I've actually been looking to see. Can I get a cash buy or something like that? But my wife, she likes the nicer properties, and that's you're talking about, if you buy at a high point with that, it's not $50,000 or $100,000 difference. You're eating a big chunk of a mistake if that's the case. So
and you got to look at a 20% correction, right? Like the market's gone up ridiculous. Since 2010, we're up 50%. So you look at, there could be a 20-25% drop. Just realistically.
It's funny. Like, I know also the East Coast side pretty well. We used to go down to Fort Lauderdale a lot. So my parents and I would look at real estate down there. And I feel like, compared to down Miami, Lauderdale area, where you see some properties marked up close to 100% in the last 3 years. Like Tampa's like, shit, this is pretty cheap. So
that's one of the reasons I like Tampa. I'm like, nobody, like, obviously people know about it. You see the development here, you see the prices rising. But when you compare it to Miami, like, you got a chance here. There's a chance. And the deals we're looking at, we actually looked at 2 in Largo, which is like Clearwater area. And we're looking at 24 units out there. Both times, it was ironically 24 unit. I think 12 units and 24 units. And
may have seen that actually.
It was not so hidden. One of them wasn't so hidden, and that was. And then we looked at 24 units in Orlando. 1.7 million in Orlando, 3 million in Largo, and both were great deals. Like this was, these were 20% discounts on what the properties were really worth. And you look at it, and it's like, man, like you just know that's a deal. Like, it's a deal. It makes a ton of sense, and you got to move fast on these. You can't wait. You've just got to put the offer in, move hard, move fast. And that's what I keep hearing from the guys down here is like, this is a fast game.
And if you're willing, like what I found, that if you're willing to do some of the smaller properties, like 50, 60 units and below, there's more of those, because the guys, like the larger institutional guys, and even the larger multifamily guys, are staying away. And For me, I told you I work 40, 50 hours a week. I'm working with partners. So if we're going to do a deal, I'm going to have to travel for it. It's usually going to be 75 or up. That's kind of what we're screening. So it leaves the local guys have a lot more advantage. Like if I had them locally here, I'd be more apt to do a 30 unit or 20 unit. But for now, we're looking at, for the same reason, just economies of scale, 80 and up is 75, whatever.
Andrew, if you get anything under that 80 and you want it, I'll pick it up for you.
Right. Okay.
Economies of scale, man. I just figure
that.
I'll own a whole bunch in one area. That'll be easy enough for the manager to own.
If you can do that, that's the exception, right? Like the couple properties we're looking at down in Georgia are like collections of like a 40 and a 50. They're 2 miles apart. And that makes total sense because you got one property manager and full-time, maintenance guy, full-time property manager. The numbers work. I mean, simple as that. So.
Yeah, and I love that you're looking at the 80 to 120. Like those are great property. Like those deals, they're easy to put together, easy to swing. Management fits right in there. You don't have to worry about anything. Yeah, and that's like really the sweet spot for a syndication or just putting a couple investors together. I love those. Like I love those deals. How are you doing finding them?
I mean, it's tough, right? I mean, it's again, persistence is key. And for me, the way I've been finding things is not necessarily direct through brokers. Partners that go direct to sellers, and some guys just well established with different brokers already. Like me coming in, I'll say late to the game. I don't have that 5-10 year track record, right? So I'm leveraging networks with other people and just connections to people like you and I. Multifamily meetup events. I'm just going crazy whenever I have the time, and my family doesn't smack me down. I'm spending, time just investing in there versus it's going to take me longer, and recognizing that it's going to take me longer to build a track record and work with brokers. So that's been my angle, and that's how I've found what we've found so far. So, and it's worked, and it's continuing to work. So.
Yeah, Andrew, I like your mindset, man. I like what you're doing. In fact, I want to do a deal with you. I figure that the two of us together, we got about 200 units. We could just go after something. We got a ton of experience. We got equity. We can raise capital.
Yep.
What would you say is like your biggest? So if anybody's like listening and they're like, okay, he's a GP. This is what he does.
Yeah.
What is it that you bring to the table? Would you say is like, obviously you bring a lot to the table. What would you say is your main one? The thing that's like your, this deal's money, labor. Like that's what real estate's made out of. Yeah. Which one of the three is your favorite?
So a couple things that I really enjoy doing, and I spent a few months last year really thinking about what do I want to focus on. I mean, like I said, I have a limited time to invest. I can't spend 50 hours a week, so I focus a lot.
And Andrew, I wish more people listening would do that. I wish more people would look at their time and be like, damn, I don't have time to do everything. What is my one thing? And I can hire everybody else.
And honestly, I'm forced to do it because I don't have a choice. If I don't do that, I'm going to dilute myself. And that's how the first couple months went for me. I'm like, holy crap, this is overwhelming. And then I really I talked to my mentor, and he's like, hey man, what do you really like to do? And I was like, I like working with investors. I like talking about deals to investors. And I do have quite a bit of hands-on experience with like kind of the construction side of things. So that's been my two angles into the deal so far has been, hey, let me help with the raise. Let me help with putting the deals together. Let me help with packaging it, pitching it. And I enjoy that side, and I enjoy kind of overseeing the CapEx planning and things like that. So the two things that I've honed in on.
Excellent. Yeah, those are key.
Man. And everybody needs them.
I found I like finding deals, right? Like you
cool.
Give me time. I'm like, let me bring something. That's where I find a lot of ease is I just get deals. My hardest like I guess issue is getting through all of the deals, like just working through them all, making sure that the right.
Oh, it's the underwriting can eat you alive. I mean, that's what I realized when I was trying to do that and do everything else. To me, building a team, I buddied up with a partner of mine from my mastermind group, and he's awesome with the financial analysis. I'm decent with it. I can play with it. I can get by. He's really good. And, so I'm like, hey man, if you're willing to just like, I can't keep up with deal flow. If you were willing to pop the hood on a couple of these and spend 15 minutes, he'll come back with like 3 slides and like rip it apart in 20 minutes. I'm like, that would take me an hour. So again, efficiency of time, partner up with people. Hey, you're going to take a smaller slice of the pie, but you're going to have more pies to go after. So it doesn't really matter. And more people win. So
we did the same thing. We got a gentleman, Ken Hoffman, is in the community. And I was like, Ken, like, I want to partner with you. I want you to be a part of this. I'm just, all deals go to you now. You just funnel it into that one person who can create that for you. So Andrew, phenomenal job so far. Like, let me say this, you're an entertaining person and you got a lot of gifts, a lot of knowledge. how did you start the training company? Like what year, what time, like what made you start doing the podcast? Like where did this training concept come from?
So I was talking to actually from my mentor. He has a podcast of his own, been very successful with it. And we were just talking about, hey, how do you build your brand? And how do you get that? What do you enjoy doing? And, and he's like, hey, if you're willing to put yourself out there, it's a great way. And it's a proven way that, yeah, there's hundreds of thousands of podcasts. I think there's 3 million in iTunes now out there, but yours is your own. And I was a little hesitant at first, but I'm like, I don't really mind putting myself out there. I love talking about what I do. I love talking, like I said, my goal is really to help other people, educate people first and foremost of everything. What a great way to do it. And I don't, doesn't matter to me if it's YouTube or it's podcast or whatever. I just happen to say, hey, this is an easy way to get started. It doesn't have to be perfect. You're not going to master it in your first week. You're not going to master it in your first 50 episodes, but you just got to get going. I mean, simple as that.
Absolutely, brother. Yeah, that's badass that you mentioned you had a mentor a couple of times. Do you
Yeah.
also mentor? Do you have a training program? How have you worked this out? You start with a podcast and just.
Yeah, not yet. It's something I for sure want to do, and I aspire to. My wife's like, you got to be a coach someday, and I'm like, yeah. It's just for me, it's just I gotta pace myself and just keep focused on, hey, build your resume, build your business, keep the family afloat, and pace it at time. But as one day, I sunset out of the W-2, I'll find myself with I'll be looking to get back into the game of coaching for sure. I enjoy helping people, and it's something I'll do, but with a good chunk of my time later on for sure.
Yeah, you're right where I was maybe 3 or 4 years ago.
Yeah.
I was just like, hey, I want to do the coaching thing at some point, but I'm just not there yet. And
Yep.
we built it out. Now we have a back end with 8 other coaches. And
That's
so
awesome.
it's
awesome.
phenomenal. By the way, I have an affiliate program where other real estate mentors and podcasters, you send me some of your people, I fix them up, and you get paid for that. So
Perfect.
I want to hook you up.
I'll be hitting you up, man. Sounds good.
Man. And that way I can, while you're waiting to build your program, we can make sure that your people are moving forward. I like that.
Awesome. Cool.
Teamwork, man. Hell yeah.
Hell yeah. That's
all right, so
we're gonna do a
deal. We're gonna do a deal in Florida. I'm gonna pay you for coaching when you don't have to do all the coaching. And I gotta get you to come to my Saturday trainings. I at least gotta get you into one of those, because I think that what you've done is pretty impressive. And I think that other investors across the country would love to hear, more about what you're doing, why you're doing it. In fact, you're still working, 50 hours. And you said you have kids too, right? How many kids?
Oh, yeah. 2 kids. Yeah. Hopefully you can't hear them too loud in the background. They were, my wife took them out of the house, but you can't stifle them for too long. They're 5 and 7. So they have endless energy.
5 and 7 is an intense age. So you're married. How long have you been married?
11 years now. Yeah.
So I can't tell you how many people come into the program and they say, my wife won't let me, or I got kids, or I'm working a full-time job. And Andrew, I don't have enough hair, right? Like I
don't have time. I don't have to go to the haircut, barber salon, whatever you call it. But
right, you got the right style, by the way. Let me just give you a compliment.
I love it. Likewise.
But you got 2 kids, a wife, and full-time job, and not just a normal full-time job where you just drive and come home. Like you're traveling all over the country for your job.
Correct. International.
Investing in real estate.
Yep.
And what would you say to somebody who gives any of those excuses?
The one thing I hate to hear from people is I don't have time for this or that. And there's so many hours in the week. And if you really pick it apart, you don't need to sleep more than 6, 7, 8 hours. Your W-2 sometimes can be demanding for sure. But if somebody says, I don't want to make it a priority, or I'm not passionate about that, I believe that. But to say that I don't have time, I hate that. I hate that phrase. So you got to make the time. If it's important enough, you'll make the time. Simple as that. There's really no other explanation needed.
That's the truth, man. Yeah. As simple as it is, people just got to miss that.
Yeah.
They're like, but it's something else. Like they're just gonna miss that.
I say it to people all the time. Like my wife probably hates when I say it to her, but she's like, I don't have time to do this or that. I'm like, you're saying you don't want to prioritize it. That's cool. I mean, but you're going to have to prioritize. That's the way life works. But to say you don't have time is like, you're given a gift of a lot of time in life and you can't waste it.
That's right. You got a lot of time and you also have almost none, right? You look at how the compound effect goes and how your business grows. It's like, man, like there's only, what do I got? Another 50 years, 60 years? It only gets so much and you got to enjoy it while you have it. But at the same time, if you waste it, if you enjoy it too much, it's gone.
Yep.
Andrew, if I were to, I want to wrap this up, but if
Mhm.
if I were to ask you my most powerful question, this is the one I love
Oh
asking.
man, I'm
I'm
nervous now.
scared. Yeah, no, you'll be fine. You got this.
Okay. I'm good.
If you could go back to 20-year-old Andrew
Yeah.
and give yourself 3 pieces of advice to get to where you are faster, happier, and richer, what 3 pieces of advice would you give yourself?
Well, for me, I mean, I've always been a happy guy. And I've been really blessed in that regard. For as far as the investing side of things, if I went back to, let's say, my 23-year-old self as I just launched my career, I spent a lot of money enjoying life, buying cars and things like that. That $50,000 or $100,000 back then would have snowballed to the point where I'd have a lot more flexibility today. So that, back to me, kick myself in the butt, 23-year-old self. Invest that money for sure. And specifically in real estate, because if I look back at the timing of that, what that was, 06, 07, would have been perfect timing wise for the real estate boom soon to come after the crash. Right. So that would have been awesome.
True. So
Yeah.
invest your money.
Yeah. Well, I mean, simply said, but my invest your money specifically in multifamily real estate.
And multifamily real estate.
Yes.
And if you had 2 more pieces,
Oh man.
how do you stay so happy? What advice would you give to a 20-year-old who hasn't figured that part out yet?
Yeah, and it's something I actually did back then. Probably didn't spend enough time. Like, take care of yourself. Reward yourself with trips and spend time with family and friends as much as you can. You never know. Every day is not it's not guaranteed. And I didn't take that too seriously back then. But looking back, I'm like, holy crap! Sometimes you're like, yo, I'm lucky I made it to almost 40 now. But enjoy life. I mean, you gotta work hard, but you gotta play just as hard, if not harder.
I like that. I
Yeah.
like that. So
Yeah.
invest in real estate, multifamily real
Yeah.
estate.
Early.
As early as
Yes.
you possibly
Yes.
can. Yes,
Yeah.
I wish that was told to me earlier. My whole family, the entire time I was investing, was like, no,
Yep.
stay out of them. And I wish that somebody in my family was like, dude, like you're behind, right? Like somebody should have told me I was behind.
Yeah. Yep. Yeah.
What
You need
would
that.
the third piece be if you were to give it to your kids, right?
I mean, I think it's around educating early too. So not only investing, but before you invest, maybe in parallel, is just relentless education, and not necessarily doesn't have to be formalized through, higher level college or master's program. I think even more powerful is targeted application of education in an area that you're passionate about. And, for me, it's real estate, obviously, but if it's stocks, if it's crypto, whatever it is, like spend just as much time educating yourself. There we go.
Read the books, man.
Yeah, I'm a big book nerd. I think I told you about that before we kicked off. Yeah, I've gone through 30, I think close to 40 books in the last 12 months.
Hell yeah.
I'm a nerd. Audiobook, doesn't matter. Kindle version, paper version.
Bro, I'm at 60 right now.
Are you really? Yeah.
In the last 12 months.
You're crushing it. Yeah. I went hard over the Christmas holiday. So everybody's like, how do you read that much at the job? I was off for 2 weeks in my W-2 and I was building a business. And I'm like, it was pretty much a book or 2 a day.
Yeah.
So relentless education would be number 3 for me.
I love that. I love that. Andrew, you've got some serious, your mindset is right. You're juggling a lot, but you're doing it really well. You're staying positive. You're taking care of your family and you're having fun. What is the easiest way somebody can get in touch with you? Maybe if they wanted to either invest with you or send you a deal in the Tampa market. He's going to do a deal with me, by the way. So what would be the easiest contact for you?
Yeah, a couple avenues. I think most frequent, easiest is email. So Andrew, my first name, at investwithredline.com. And our website is www.investwithredline.com. No surprise there. And the company's called Redline Equity. You can find me on Facebook. I'm an automotive guy. So the theme going through my investing, the syndication business, Redline Equity, there's no surprise there either. But so you can find us on Facebook pages, Instagram on the podcast side, Crushing Cash Flow, Facebook page there, Instagram, and we'll be interviewing Walter here in a couple of weeks, I think, too. So
hell yeah, brother.
Yeah, man.
I'm looking forward to being on the podcast. And if you're listening right now and you thought that this podcast was valuable, please go and write a review on iTunes, both on my podcast, on the Alchemist Nation podcast. And Andrew, one more time, the name of your podcast.
Crushing Cash Flow.
Crushing Cash Flow, the Crushing Cash Flow podcast on iTunes. The reviews help us get to more people and help more people. As you heard, Andrew's got a mission to help 10,000 people find financial freedom. As you already know, I'm on a mission to build 100 millionaires this year. And it's only from you helping, writing the review, sharing these posts, sharing the value content, and letting other people know what we're doing. And that's possible for them. Cheers to your success. When you have a choice, always work with the best. Andrew, you are an alchemist. Thank you, brother.
Thanks, brother.